Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwagu. On the show today, South African Airways gets 3.5 billion rand emergency funding from state-owned bank. Ethiopia and Egypt yet to agree over Nile Dam. And Moroccan banks respond to King's call for cheaper SME loans. We'll begin with the intraday numbers, and here on the African continent, only the market in Egypt was looking green. As at midday Nigerian time, the Nigerian stock index was down 0.16%. The JSE index was down 0.13%. EGX 30 in Egypt traded in the green, up 0.98%. Kenya closed negative on Wednesday. And mixed sentiment was observed in the Middle East at intraday. While the UAE markets were in the red, others went towards the north. Abu Dhabi index was down 0.17%. Dubai financial market was down 0.54%. Elsewhere, the Qatari index was marginally up, while the Saudi index went up 0.70%. In Europe, markets tumbled today, weighed by a rising coronavirus debt toll and reacting to the U.S. Federal Reserve's decision to keep interest rates on hold. Earnings are also on tap. Let's bring in Chelsea to tell us more. Hello, Chelsea. Good afternoon. Well, let's talk about the earnings. Germany's Deutsche Bank reported a bigger than expected loss for 2019 of 5.7 billion euros as costs related to its restructuring plan ate into profits. Is the bank forecasting a turnaround for this year?
Deutsche Bank is sounding very positive about the future here. We were just at the press conference earlier today where CEO Christian Sewing acknowledged that this is a significant loss. It's one of the biggest annual losses in Deutsche Bank's history. But they're very optimistic about the future, and they say that this restructuring plan that they unveiled in July, which is really one of the biggest restructuring plans in Deutsche Bank's history, they are basically rethinking their global presence. They have said they're going to get out of businesses like equities trading and focus really on their German customers. So it's a really big shift for Deutsche Bank. They said it was going to be expensive. It was going to cost them about 7 billion euros over the next few years, and that's certainly being reflected in the numbers that Deutsche Bank is reporting. But they also are saying that they're seeing a lot of progress in their business. They're seeing growth in areas like investment banking. They saw a 31% increase in fixed income trading in the latest quarter, and they say they're seeing more demand from customers. They're seeing customers who had left come back. So they are feeling quite positive despite the fact that they're losing a lot of money right now. And investors seem to be buying that for now. The stock is up about 1% today, despite the broader market sell-off.
Interestingly, the German government raised its forecast for economic growth slightly to 1.1% for 2020. What's driving the brighter outlook?
The government is saying they are a little more optimistic on mostly the industrial sector. So Germany's economy has really been struggling over the past year with a pretty steep recession in the manufacturing sector, which is really important to the German economy because it's so export focused. So things like the trade war between the U.S. and China, Brexit, all of that has really put a big burden onto German exporters. They're saying that we may be seeing that trend bottoming out here. So some of the indicators we've seen over the past several weeks have indicated that industrial production, industrial orders, all of those indicators of manufacturing activity seem to be pointing to either a bottoming out or a slight increases. So they're optimistic that the manufacturing sector is starting to heal, but also with some of the trade headwinds sort of taken away because of the progress made by the U.S. and China on a trade deal, the fact that Brexit is getting a little more clear what the next steps are. I think that's all also sort of feeding into this brighter outlook for the German economy.
And across the Atlantic, earnings continue to roll in, particularly from the U.S., with tech giants like Apple and Microsoft reporting record results. Could the strength of tech earnings help support shaky stock markets?
So the tech companies are reporting very strong earnings. As you mentioned, Apple, Microsoft, record quarters for both of them. We're still awaiting results from Amazon and Alphabet, but these companies are reporting continued growth, but it hasn't sort of put it hasn't done as much to support the stock markets as tech earnings have done in the past. Over the past several days, U.S. stocks have continued to decline despite these blowout earnings from tech companies. Tech stocks have really supported the U.S. markets over the past decade. Really, it's been one of the key drivers of U.S. stock outperformance. And so I think a lot of investors are hoping that tech stocks will continue to drive the market going forward. But given the fears sort of circulating among investors right now about the spread of coronavirus and what that can mean for the global economy, it doesn't appear that the tech earnings are enough to really offset the concerns over the spread of that virus at this point.
All right, Chelsea, thank you for updating us on those market developments there. Enjoy the rest of the day.